All right. First things first, don't forget to take advantage of the Labor Day deal where you can get 50% off 1 month of bank trade alerts, or for the first time ever, you can get a 10% discount on the annual plan. So if you've been wanting to try bank, now is the best time. And if you're already a bank member and committed for the full 12 months, go ahead and take advantage of that annual discount as well. All right. So today's SPY was down 0.43%, and we are getting the pullback into this critical support at 448. And this is where the bulls are going to need to hold, because if we are bullish, we should simply get the breakout, get the retest of the breakout, and then continue higher towards the gap fill above 455. Now, if price action proves this is not the case, we should lose support. And if we lose support at 448, we are very likely coming back down here towards 442 to 444. So this is a very simple plan right now, because we do have the bull trend. The bulls need to show up at support. And if they don't show up at support, that is your warning from the price action that we're likely going lower. So watch that level at 448, and only the price action can do all the talking here. We're not making any assumptions of whether or not we bounce from here. Although we are in the bull trend, the odds do favor that we are going to higher prices. Remember, there is nothing magical about a trend. It simply means price action is moving in a certain direction. And we currently have a bull trend, which means price action is continuing to push higher this year. You can go sideways, you can go down, or you can go up. And 2023 has been one of those bullish years where we just continue to push higher. And I think there's a good chance we are going to continue to push higher, but we need the price action to prove it by bouncing from this support level. The next upside targets will be the gap fill at 455, and then above that we have resistance at 460. On the NASDAQ 100 triple Qs, we were up 0.13% today, and the triple Qs are also testing the support of the breakout, which is this level at 375. Just like SPY, we need to hold above this level, and if we do, we're likely going to continue pushing higher towards 383 and then 387. If we lose support at 375, we're likely coming down here towards 370 to 371. And that will be some very critical support. So do pay attention to the price action at this critical support zone. And if we bounce from 375, that is a textbook bull trend bouncing from the rising 5 EMA while we have all the moving averages stacked to the bull side. On the Dow Jones, we were down 0.57% today, and the Dow Jones is confirming the bearish engulfing candle from last Thursday because we broke down below the low and we lost that support right around 348. From here, we come back down to critical support at 346, and if 346 doesn't hold, we are very likely coming all the way down to the gap fill below 340. So in the Dow Jones, critical support is 346 on the daily chart, and if we continue to break down below it, we are going to be expecting the next leg lower in the Dow Jones. Upside resistance is still 350 and then 353, but right now we're tracking what could be a breakdown on that break below 348 with confirmation on a break below the critical support at 346. On the Russell 2000 IWM ETF, we were down 2.11% today, and the small caps failed to hold the critical support at 188, and we did get a very bearish candle that broke down below all of the moving averages. From here, we could come all the way back down towards this support at 185, and we still have the critical support at 183, because if we lose support at 183, we are likely going all the way down to close the gap at 176. 188 is critical support, which is now broken, so watch for that level as resistance. And if you want to be patient and get bullish on a breakout, you're waiting for that weekly breakout above 197. On the ARKK ETF, we were up 0.89% today, still holding above all the moving averages with the price action and holding that critical support zone right around 43. If ARK can hold above 43 and break resistance at 44.5, we could go on a bull trend that could take us all the way up to the gap fill below 49. On a break below critical support between 42 and 43, we could likely come all the way down to fill the gap at 36, so this will be a very critical test for the ARK ETF. On the VIX, we were up 1.3% today, and the VIX is getting a little bit of a spike today, but this is completely normal because we were sitting right there at that support between the high 12s and low 13s. We really don't need to worry about the VIX unless it starts spiking out above 15 and starting to look impulsive. On Bitcoin, we're currently trading just above 25,000, and the Bollinger Bands are starting to squeeze, and we have this very clear bear trend with all of the moving averages stacked to the bearish direction, which means we're not getting bullish until we can close above 28,000. From here, we're likely testing support at 25,000. If that fails, we're likely going all the way back down to 22,000. On Tesla stock, we were up 4.69% today, and we had that perfect bounce from the critical support at 245, and we're back above 255, which means from here, if Tesla can break the high at 258, we can go well on our way towards the next price targets between 267 and 274. Stay bullish above 245 because that's the critical support, and if at any point we break 245, we're likely coming back down towards 230. Below 230, that would be a bearish breakdown, and then we're coming all the way down to fill the gap below 218. But right now we're still bullish because we are still above 245. On Apple stock, we were up 0.13% today, and the Bollinger Bands are expanding enough for Apple to go up here and close the gap tomorrow, which is that gap just below 191. From that gap fill, we could pull back and retest the breakout, which could take us all the way back down towards 185. So look for a little bit more upside in Apple to fully close the gap, and if we continue higher after the gap fills, then we can likely push towards 192 to 194. So jumping back over to the S&P 500, this is going to be the breakout retest, and we're at most of the critical support levels across the board, with the small caps even starting to break down below it. So in the major indices, watch these critical support levels, and if price action breaks down through them, you know exactly where to look for the next leg lower. And if we continue to lose support levels, then we could see a bearish September and we could get more selling, which could eventually lead to high volume panic. So manage your risk at critical support, meaning if you're bullish and we're losing critical support, you need to start managing your risk and getting more risk off. So far, there is nothing on the chart that says we need to get risk off, but obviously the price action is going to do all of the talking and make that decision for us. Don't forget to take advantage of the Labor Day sale for bank trade alerts, especially if you're an existing member. Be sure to take advantage of that annual discount while it's available. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.